Okay, good evening, guys. Welcome to this special live FOMC Minutes webinar. Okay, my name is Steve Ruffley, and we're going to go through the basics of what we're going to go through tonight, just the usual risk warning and what I'm going to cover tonight. And then we'll have a bit of a chat about what's going to be expected from these FOMC Minutes. And it's really tonight a bit about kind of reading between the lines. As we know, people like Ben Bernanke are never going to come out and just say quantitative easing is going to start tomorrow. It just isn't as simple as that. So we have to be a bit of a detective with what's being said tonight and kind of read between the lines and understand what's going to mean to the markets. Now, the markets are notoriously violent and very, very volatile around these events. So you have to be very, very clear about what you're hearing and what you think the market's going to do. So in that respect, I'm going to look at the S&P and the Eurodollar today because, again, we're really talking about US data. So go through the presentation as always. Any questions you've got, it's always an open forum, guys. Ask me any questions and we'll go through your opinions. I'll tell you exactly what I think is going to happen. We'll go through some technical levels and then I'm going to talk off the squawk, try and give you real-time interpretations, tell you what the market could potentially do. If you see a good opportunity, I'll be trading as well. I've got my account open. So before I start, as always, the risk warning that spread betting and CP trading will carry a high level of risk or capital, confronting losses that exceed your initial deposit. They're going to be suitable for everyone, so please ensure you fully understand the risks involved. Now, the information and comments provided herein under no circumstances considered an offer or solicitation to invest. Nothing herein should be construed as investment advice. Information provided is please be accurate, the date the information is produced. Again, education only, guys. The content of the webinar is the personal opinion of the moderator, not Intrader.com. Content does not constitute financial investment or tax advice. Intrader.com does not accept any liability of the content or comments made during this session. So what we're going to talk about tonight, obviously, do some live charting analysis, talk about the markets now, where they could be heading, multiple time frames. We're not really going to cover that right now, but I will show you how to build up a view, scrolling through and zooming in from time frames. All about fundamental analysis tonight, all about what's going to happen, what's going to be said by and said from these FOMC minutes. And then if I see something good, I will put a trade on. It's, as I said, it is going to be an interesting session. It's probably the most anticipated set of minutes in a long time because we really do need some clarification on the quantitative easing in the third quarter. And really, again, as the markets have dipped off, is this really the market having a natural sell-off, or is the market anticipating that we're going to come out and say, yes, quantitative easing inevitably has to start at some point, and we're going to start with it. We're going to start tapering the quantitative easing now. We just don't know, do we? We just don't know. In my thinking behind this is also that Ben Bernanke wants to retire. He wants to, leave his position tenable for somebody else to take over. So I don't think he's going to say anything too shocking. He hasn't been great in the past, Bernanke, about the way he's phrased things and termed things. Obviously, people like Jean-Claude Trichet were the master at this, for the ECB back in the day. But Bernanke's not quite as subtle. He's not quite as kind of guarded with his comments. So we could see a slip. He could say something, and once the market jumps on it, again, we're going to see some huge moves. So, okay, let's go through some charts, guys. So we've got the Eurodollar. Obviously, again, we can see that the dollar's weakening against the euro. These are the hourly charts. So let's go with the higher time frame analysis as always. So starting the monthlies, we can see that really we're making progressively lower highs on the monthly chart. So the dollar seems to be running out of momentum on the euro. But again, we're in the stage of recovery here. Again, if you want to do something like a Fibonacci retracement, we can see from the lows to the highs, we're not quite at that 50% and we rejected that. So really, a key close on the monthlies below what we're trading now could see that the market actually starts to drop off. So again, just by putting things like this, and you can start to get an idea on the higher time frames what could happen within the market. So that's your monthly. So scroll down into the weeklies. Again, a little bit more positive. We're getting towards these weekly highs up at 1.37106. So again, still plenty of upside target on the weeklies, but again, we are approaching the top end of the Bollinger Band, and as you can see, what happens before when we close outside the Bollinger Bands, we do see a big reversal. Okay, so build that into your plans. Daily, again, we're at the top of the range today. Market sold off a little bit, but really, you'd have to say there's. For me, again, it depends how your fundamental view is. My fundamental view is that the US is still going to remain stronger than Europe, so I'd still be buying dollars over euros any day. But you have to, wait for the right kind of time to pick that point. So I guess anywhere we find significant support above the moving average and above I guess 1.3714, the market still has plenty of potential to get as high as I think really by Christmas 104.0 and higher. That's where I think it's going to go. So let's look on the hourly charts. We see the market really for the last couple of days been selling off, but we're hugging that lower end of the hourly Bollinger Band. So we could be easily, if we hear some good news out of the FOMC minutes today, then this market's going to spike right up, and 134511 is the target. Above that, 137106. So plenty of room on the upside. So really what we'll do is we'll go into the 5-minute charts for the actual kind of trading. We can see the volatility. We can see where the market is going to find short support down here at 1.33438 and the resistance at 134.133. Okay, so that's pretty much, again, a quick overview running through what the euro dollar is. We're kind of in a recovery mode in the longer term sense, but I think really for me in the short term, we're still looking for a downward move. I'm going to see this dollar strengthen against the euro, I feel. So this obviously will mean that the euro is going to keep on moving down. Okay, because it's a euro versus a dollar. So as the euro gets weaker, okay, people will sell the euro dollar. Okay, so the S&P, same kind of thing. We'll look on the monthlies. Again, this very, very big extending monthly move. So we've only really come back this much, okay, back into this whole range. So if the market is going to continue down, it's got absolutely bags of space to go. Okay, so don't be fooled that we're in a big sell-off here, because we're not. We're right at the top of the range. There's profit taking. There's people just taking some longer term short. There's absolutely no reason to think that we're certainly changing sentiment for this bullish direction just yet. Look on the weeklies, same kind of story. So we had a couple of 3 selling weeks, but we're just back on the moving average for the weeklies. So it won't be until we get down to these areas like 1553 before you even consider that we're in a bear market rather than a bull market. So plenty of scope for the market to buy dips. So don't be fooled into thinking that that's the end of the upward move. So dailies, again, just zoom in. Again, we've seen a few bad days. The market's really kind of held its own around 164875. So that's really the pivot. We're at the lower end of the Bollinger Band, so if the market does take today's comments well, we can easily get back to 1685.50, which is key support for me. Support, resistance, I guess. Resistance on the way up, but that's where the market's going to find the new level to get higher. That's going to be its base gap. It's going to find support and touch and make fresh highs, for sure. Okay, so can we talk about gold? Can we talk about, okay, if the US dollar weakens and gold continues rising, that's what I understand. Okay, well, yeah, that's one way of looking at it, but I think you have to look at what, again, you have to think about gold, it's the safe haven, again, it doesn't matter what comes out of the FOMC minutes today, whatever is going to be said, priced into the market, there's nothing that's going to change gold. It will change in the short term. It won't change the long term view what's said today. Okay, so we've only got really 7 minutes before, the figure can come out. So let's just go on to gold. And let's have a quick look at what gold is telling us. Okay, so on the dailies, we've really kind of, aggressively moved down. The market bounced, from its low at 1,180. Again, my analysis in the FT have said that the market's going to get to $1,000 by 2015. I still stand by that. Again, I was selling, gold way up here. So you can see the market's, again, aggressively moved down, but it's really kind of struggling, isn't it, to kind of get back up. It's finding support, and it's trading well with the Bollinger Bands. Again, when we break outside, the market goes up. When we break on the upside, the market goes down. So you'd have to say if the market doesn't make an attempt to break 1384.35 in the coming days, then the market's going to take over. The market's going to find all these levels of resistance, and we're certainly going to get down to the moving average. And I would suggest that 1338.04 is a level we could see on the dailies in not too distant future. So that's really, a good 400 ticks away, but that we could easily achieve that. So on the hourlies, again, we're just moving in a bit of a sideways movement really. The short-term resistance has been between resistance has been 1372.93 and support at 136140. So we're in that tight range really. We've only just broken out on the low side here, rejected it, ties in the Bollinger Bands come back to the moving average, broke out the Bollinger Bands to the upside, no continued move, back to the moving average. So again, until we see some new data, I'd expect the market again, it's trades up to these highs, maybe as high as 1384, then comes back to 1365, the moving average, and maybe again, if it does reject a little bit lower, 134769 is certainly interesting point or pivot in the market. Okay, I've only got time for one more, so we'll do the Aussie dollar. It's not one that I trade, so it's not in my favourites. Where is it? Aussie. US dollar. Aussie. Okay. Aussie. Okay, well, I'm just being blind here. I can't see it. I can see the Aussie New Zealand dollar, but I can't see the Aussie US dollar. There it is. Okay. So, what's going to happen in the Aussie dollar? Well, the Aussie dollar's been in a massive downward spiral for quite some time. But if you look in the monthly chart, you can see it's only recent times that we've been heavily selling off. Until that, there's a massive rise in prosperity in the Aussie dollar, but really massive kind of resistance at 106, 123, and that's when the market turned, couldn't make a higher, so we're just coming back into that range. So I don't know. I think there's going to be a bounce for sure in the Aussie dollar, but again, it'll probably bounce here, right here at the 50% on the monthly. Okay, so that's a massive level to look out for. We're 0.85791. That's definitely a monthly, kind of bounce where the market can move back. So definitely for sure, that's where the market could move to. Weeklies, again, we're coming towards that 50%, bouncing along the 38.2 of that monthly retracement as kind of really acting as resistance now. Dailies, again, downward move. Couldn't get back to these highs up here, so we're definitely down for the short term, all the way down to that 50%. So on your hourlies, you've got, if you want to continue the down move, you've got a good 430 ticks, but the next point of testing vertical bounce will be 0.88469, and then the 50% is certainly the target. I wouldn't be buying the Aussie against the dollar until we at least touch that 50%. No way. The trend for me is still down, 400 points to play with. Okay, guys. So again, I've just put these charts on the smaller time frame. So the 5-minute charts, we can get that volatility. Okay, so we're looking for, haven't got a great deal of levels on the S&P really around where we're trading. Again, so we've just got the short term here. 1640 and 164875 on the top. Okay, so I don't really kind of think anything in particular today. We'll have to be a bit of a, like I said, a bit of an expert at reading between the lines here. So the main 4 points or 5 points that I've written down is the economy in the US, according to Bernanke, is growing at a moderate pace. So any change to that term, moderate pace, you'll have to make a judgment call on. Okay, so really they're looking to remain at the $85 billion bond-backed buying scheme. Okay, that's what they're looking to carry on at. Any change from that could be taken, a different way by the markets. Inflation way above the 2% target. Okay, so it's probably likely the Fed are going to raise this to 2.5, but then also put a target on the low side of inflation to 1.5 and link that in with the jobless claims. So until jobless rate gets below 6.5, they're certainly not going to do anything with the inflation target, which means obviously they won't do anything with short-term interest rates. Okay, so that's what we have to look for. Forward guidance, any kind of idea of what the short-term interest rate is going to be, what their stance on that is, that's the big thing. Anything to do with QE3 tapering, that will be a big thing. And anything, again, to do with the moderate pace or the bond-backed buying scheme, that's what the markets are looking out for. Okay, so that's what we have to listen for. So we've only really got a minute before they start. They could come out in the next 5 minutes, the next 10 minutes. So put the squawk on. Anything that I hear, I'll try and give you the best of my ability explanation of how the market's going to take it. Good news is going to send, obviously, the euro down because the dollar will go up. And any good news will send the S&P up. Any bad news will send the S&P down. Okay? So we're just looking out for... bad news, you have to think about bad news for the economy. Okay, so bad news is that quantitative easing stops. Yeah, so the tapering is inevitable. That's bad news for the S&P. The S&P will go down. So you have to think about it from a trader's perspective, not the economy, a trader. What does a trader think is good and bad news? Quantitative easing, okay? Okay. Lots of data coming through now, guys. The market's selling off, it's taking it negatively, but see, we're seeing a correlation. The euro is selling off against the dollar, but also the S&P. They're talking about reducing bond buying. That's why the market's going down. They're talking about reducing bond buying. US jobless rate has dropped considerably, though that is more positive for the economy. Okay, so the market's coming back now. It's not really taking that data on board, so the market could go positive, and if it does, there'll be a big spike. Change the forward guidance could undermine forward policy, okay? So we're just going to review these quickly, okay? So the market is certainly taking these negatively. Okay, so it basically says that everybody wants to be patient and they're all holding on the bond buying strategy and quantitative easing. So it's not really saying one thing conclusively either way or the other. Fed would reduce the rate of measured buyback, if the economy did recover. So that could be why the S&P is taking a bit of a dive here. Okay, guys, so there's pretty much a lot of information coming out at the same time, but nothing really one direction or another. Basically what they're saying is that they're still going to remain cautious, but there's been no forward guidance really mentioned, so nothing about short-term interest rates. It all seems to revolve around the bond back, scheme of, buying these billions of bonds every quarter is not going to go out of the market until we see significant gains or drops in the jobless rate. So the market seems to be thinking that obviously it has been discussed in the markets and in the FOMC that there could be a potential, a slowdown of these bond back buying policies, and maybe therefore will lead to quantitative easing tapering, but nothing solid, nothing conclusive there, to be honest. So in the S&P we've kind of dropped off, 60 ticks in a straight line. So nothing really major. We've not broke the current kind of value just yet. Okay, just here where I said the initial support and resistance would be. So the euro dollar again is taking a dive. It's looking to kind of go down again. We don't really have any major levels in the market until 1.32057. That's certainly not enough for the market to get down in this session. Okay, Aussie broke the 90-cent major downtrend coming. Yeah, okay, well, good to see Ben Bernanke could take his time out from the FOMC minutes to join us today. Yeah, well, like I said, I wouldn't be buying that to hit the 50%, so that is certainly where the market could go to. So really, we've seen the markets bounce off a good level of support down here. So again, it's a difficult one to trade, isn't it? You don't really have any kind of concrete figures to go off. It's very unlike the non-farm payroll where you have some figures to kind of chew over and understand if it's good or bad. It just seems that certainly the buyback has certainly been discussed, and quantitative easing again has been discussed. But we haven't got any clear decisions on when that's going to stop. It's still, basically, to me, just a wait-and-see policy. So, in the general scheme of things, the FTSE continues to fall. The DAX is not really kind of that much down. Obviously, the S&P here is now about 90 points down. The Nasdaq's just down about a point down, 100 ticks. So, again, you could see if there's any short-term possibilities, to perhaps buy some value in the markets. Perhaps, the equity markets, that might be. But really, for me, I can't see any major, support levels in the market right now. So the best thing you can do is wait for this 5-minute candle to close, which closes in a minute. And what we'll do is a Fibonacci retracement. Okay, so I don't think we're going to make a new low now. So I can safely do a fib from the low to the high. So the market's going to retrace. It's going to get back to the 50%. Okay, if the market closes above that 50%, we're going to make a new low. If it gets above that 50% in the next candle, then we could see the market regain and get towards the resistance up here. That's how these things work. Well, I mean, it's up to you, Daniel. I can't really give you financial advice, but okay, we've closed below the 23.6, so I definitely expect the market to test the low here. Okay, we're going to make a new low for sure. I'd be amazed if we didn't in the S&P. Okay? So wait for that to happen and see where the market overextends to. Okay, if the market does remain a lower low, which I would be very surprised at, is certainly going to want to test 1642.70. Okay? So that's just a Fibonacci in the first 5 minutes. So everything that needed to be traded initially, there we go, new low. Okay? New low. So we have to see what the market does now. The market doesn't significantly make a low. It's definitely going to try and get back to that 50%. Okay? So again, see the euro is still selling off against the dollar. So again, might be an opportunity to buy the low in the S&P here. Okay, the markets in Europe are still actually trailing further down, so it's a dangerous move. Again, the Nasdaq's really kind of, dropped another 40 points now. So again, you want to be very careful here. You don't want to start, buying the bottoms here, catching pianos as we call it in the trade, because if the market kind of wants to sell off, then there's such, very, very thin liquidity, the market will push down. I've got no real levels of where I can see the S&P stopping. I mean, give me 1 second, guys. Let me just open up another screen. So go back to my other charting system, which I've just got a little bit of a better setup. So again, on the dailies, you can see the market's just broken 1641.00. I did say on the market commentary that this was a key area down here at 1627, but I just don't feel like the S&P can get as low as that. So we can see the FTSE here again is really just stopping on this weird little trend line that's been working the support and resistance all the way down. So the FTSE's still got a way to drop if we want to go down. The DAX has got a clear target of 8245, and the stocks a massive level at 2753. Again, these blue areas are what I called in this morning's report on FX Street. So major resistance here in the DAX. No way the DAX is going to get to support here, but a big target level here in the S&P. So if it does want to break down, 1632 is going to be the major test. But again, we've got all these big red candles, so it's got the ability to go down that far, but we just don't know where it's going to stop. So you're either going to have to keep your wits about you and sell into this down move. And I don't really know why the markets are taking this so badly. Again, it seemed to be a bit of a wait and see policy from a cop out from the Fed to me. However, they have talked about the possibility of stopping the bond buyback. And although I didn't hear anything about the quantitative easing, really what they were saying is that the jobless was better than expected. So I think the short term that really, I guess, the short to medium term, the economy in the US seems to be a little bit buoyant, maybe, if we dare say. So if that means that it's going to be a little bit better, then that could certainly bring the argument that quantitative easing has to start. So big levels in the Dow here. So 14821. Again, we can see a big bounce in the Dow here. So I don't see any major support below that. So really the whole point of having your equities up, it's easy to talk about equities right now than Forex. Because Forex, you can trade it in different ways, and there's currency pairs and there's big traders in the market. The S&P, the DAX, the FTSE will just generally do one thing. It will take it as that really quantitative easing is definitely going to stop. So the free money's out the market, so we're going to sell down to value until somebody finds more value and buys it back. Okay, so you get a little bit of a clearer signal in the market. So again, we've got the Nasdaq now 200 points down. The S&P is just not really taking that on board just yet. Okay, so Nasdaq, the tech stocks are really leading the way. Oil down, quite significantly on this data as well. And the European markets seem to be catching up with the US now. But again, it's either we continue to find a good place to sell or we look for a reversal. Yeah, absolutely, as Daniel's just said. But, I mean, again, guys, where do we see that reversal coming? So these are dailies. So let's just flick these charts onto a smaller, more manageable time frame, the 15 minutes. The same levels that you see dailies. It just gives you a zoomed-in view. So 15 minutes. Okay? So, again, it makes it look a bit more manageable. So we put this chart here on the 15 minute. So, again, there's massive spike in the S&P. So, really, if we do hit as low as one spot, 1633 and 1632 in the S&P, that could be a buy. Okay, but if we get above 164100, then maybe the market's just going to get back into the current range and just again, retest 1648. it's just difficult, isn't it? Because once people decide that actually the news isn't that bad, then all the shorts will get out of the market, the profit takers will come in, and then the dip buyers will start to buy the market up. So again, this is where the market really kind of, kicked off from, 1641 in the S&P. So it's either going to find this as support and resistance, isn't it? Yeah, absolutely, John. I'm finding much more movement, much more directional movement in the indices. You generally find the indices will, again, be a bit more kind of responsive in one direction, where you'll get moves quickly forward and back in the FX markets, and I don't really like that. So lots coming through on the wires about the Fed minutes. All I can read through now quickly saying it's being patient. Okay, it's conclude mid 2014 bond buying, back purchase if the market can support it. Unemployment is 7%, leading to inflation hitting 2%. So again, guys, plenty of things to kind of mull over here, but nothing really that's screaming we should, be in the back of a massive sell-off here. So again, once the market's overextended, I'd expect, some dip buyers to come in and bounce these markets back up. So already the Nasdaq's dropped from, 2 points down to 143. Okay. The DAX is in danger of actually getting into positive territory. Okay. So, it depends, guys. If you want to see a good buying opportunity, 1641 could be it in the S&P. Yeah, I mean, it could not react, I guess, until again, it just depends, doesn't it? It depends what people interpret this data as. There's people that have just waited solely to trade in these FOMC minutes. Maybe people are waiting for longer term trades in order to get out of long term trades, So again, they're getting out their shorts now when the market's just pushed down these extra 60 ticks. But already you've seen that 60 tick candle on the S&P. And again, we'll see what we're trading towards the 50% mark. So we've gone down 60 ticks. We've just hit that 50%, which, again, guys, time and time again ties in with the key level, 161.40. So we close above this, then the market's going to continue up. On the 50-minute charts, if we close below it, the market's going to regain that downward sentiment is going to move up. Yeah, gold really stuck. Is that okay? Well, I mean, again, commodities are notoriously difficult, and again, that's nothing really kind of, came out of the FOMC minutes that for me would give you a clear signal on gold. So we're bounced off that 50% now. So again, the market will either try and test and make a new high, or again, it's going to just stop in the range. So try and gauge what the rest of the markets are doing. The rest of the market, FTSE, again, bought back all them losses. The Eurostoxx the same, DAX the same. Okay, so pretty much everything is starting to retrace heavily off them lows. So difficult one, guys. Difficult one. I mean, you've got to start buying into the market now just because the market's retraced. That could be dangerous. But if you find a good level of support, tricky one. Very, very tricky. Because, again, we look at this in the 5-minute charts. See what the market's done. It's hit that, again, it's closed above the 38 opportunity. It's hit the 50%, but it's not made the high yet. Okay, so this is the first 10 minutes after their FOMC minutes have been absorbed into the market. Okay, so the majority of people that are long from these lows are going to expect the market to try and test and make a higher high. Okay, if it does, it's going to get to 1648 spot 50 because all these shorts will be out. So it's got to really close above the 50% on that 5-minute chart in order for the bulls to continue buying the market and push it back higher. So there's only the SMI that's staying on the lows. Okay. Obviously the Dow's recovered a fair amount. Again, all these red candles that we saw on the FTSE, the Eurostoxx and the DAX are now dojis, and we have a very small body and a very long wick. So whatever negativity was priced into the market seems to be in the short term anyway, bought back. So really we won't look for that key pivot. And that'll be the 50%, this 1641 level. If we don't make a high and the market starts to drift down, again, we can see the overall trend of this market data continue, and the market will sell back down, or we're going to find a little bounce, and the market will come back up. I mean, realistically, the markets are just too quick to trade from on that kind of data. Okay, this is people with already positions on. Too difficult to interpret that data in real term and then make some clear analysis from it and trade. You would just be selling into the movement, to be honest. That market is moving down, so you'd have taken a punt and you'd go, well, the market's going down, so somebody knows something, so I'd sell into that weakness. That's all it was, to be honest, but I didn't hear anything that was conclusive enough for me to sell. But then I didn't hear anything conclusive enough for me to buy. So we closed above that 50% now in the 5 minutes. So let's see how the 61.8 reacts. 61.8 on the 5 minute chart in the S&P becomes a nice level to bounce from. We're going to test the top of this candle here and certainly the 100%. Okay? So if we start seeing, again, these candles on the charts are all green, but don't get sucked in. Again, I would certainly expect it to touch the 100%. Again, we're just bouncing off the moving average. Okay, so the 100% is where it's going to touch. But if that market, again, could easily find that as a key point of reversal and sell back down. Okay, there's been some comments also from Angela Merkel. Okay, Germany saying it shouldn't be overburdened in the euro crisis. So again, I don't know if that's going to bring anything to the movement of the markets right now. So really now, the decision's going to be, if the market rejects, touching this 100% here, then I would expect the market to again reassess. So let's see if there's any other opportunities really. The DAX, Euro Stoxx should expect 2785 before sellers come back into the market. The DAX really is just going green now. Again, we're still on the daily chart, so this level up here, 833.0. FTSE taking away all that tail. So again, we're at key resistance here at 6393.5, so a break above that. Could see it get back to the moving average until upper Bollinger Band. So difficult really. Unfortunately, there was nothing clear-cut enough for me to say, there was a buy or a sell in any one direction. I'd have only been going with the market movement. And again, you might have got some money out of it, but you can see how quickly it reversed. As soon as it hit the lows here, there was no levels anywhere near it really to say the market was going to reverse. And then the buyers came back into the market and pushed it up. So you've got a lot of big traders, a lot of people waiting for this data to come out and just, maybe just selling into the premise that any kind of news was going to be bad for the S&P because, the Fed have to do something eventually. So just kind of selling into that premise that there will be some bad news. So the market reacts now. Okay, it's rejected making that high, the 100%. So we've got the 50% to test again. This key 1641, which is a daily level. So if this breaks down, we could see a new low May. Find it's good support. The boundary at the top of the candle is obviously where it wants to test. Any other thoughts, guys? Is anybody else, reading through the FOMC minutes? Anyone got any clearer ideas of what may be happening? Any ideas of how the market took that sell-off and why we've just bought back pretty much immediately? Any other thoughts, guys? Anything you can bring to the table here? So really, again, we're back to where we started, really. The DAX is really getting towards positive territory, still 64 points down in the FTSE. Okay. So yeah, basically, it just seems that although the data, like the housing data and the jobless data, isn't as bad as the US economy has been thinking, it isn't good enough yet to warrant an aggressive stance on stopping quantitative easing or doing anything to stop the bomb-back buying process. So really, I guess that no news was bad news for the market, so it sent it down. But then in the same respect, no news was really insignificant news. So all them lows were bought back up, and we're just trading back, to this 50% level now here. And a bit of parity, so the market's going to have to make a decision one way or the other if this news is actually going to lead to the quantitative easing tapering and the market's going to sell off significantly, or if we're just going to keep it as a bit of a status quo until somebody, with any kind of real gumption makes a clear decision. Okay, all Junker brings to the table is an empty plate. Okay, well, that's no problem. It's not a problem there. The euro should go up from here, previous push in your view. Yeah, okay, I get that. Dollar will remain strong. I think, yeah, definitely there's going to be some dollar buying back going on. Damp firework with double speak. Yeah, absolutely. I understand. I absolutely agree. This is one of these problems that newbie traders and people that just want to get involved in the action get completely whipsawed. You buy when you sell when the market's going down, you get out for a little profit, then you keep selling, the market goes up, and you keep selling into that, then you buy, the market goes down, and you keep getting whipsawed and you lose money on everything you do. And that's my general experience of these comments, because nothing ever comes out that's really, really conclusive. Okay, so we've hit that 50% now. So again, we're just bouncing off this key 50% level now. The market's going to make a decision, and again, that we're going to push lower and get some new lows. You know, the markets across the board are going a little bit negative now. You know, again, I think the profit has been taken out of this down move now, so the real sentiment of the market is going to take over, rather than going to continue push lower in these late evening sessions, or the market's going to just, I think, really kind of trend sideways. I don't see the markets really kind of selling off aggressively on the back of this data, really. Okay, well, absolutely. FX Roy saying that he's done. He's 30% up in his equity. Good stuff. Fed will taper, so as a waiting game for the Forex girl. And then if we lose the 50%, well, again, we're just bouncing around. We clearly don't have an idea of what, certainly in the S&P, what it wants to do. So again, a very, very difficult one, guys. But again, I'd love to be able to tell you that there was something in that FOMC minutes that really gave me a particular view or direction on the market, but it didn't. And as we can see from the way the markets have reacted, they sold down, they came back up to nearly retrace 100% of that down move, and then we just moved back to the range. So we see exactly where we're trading now, trading, you know, pretty much the 50% of that entire move. Yes, we've still got a negative slant because we couldn't remake them highs. We're trading outside the Bollinger Bands, but we haven't aggressively tried to make another low yet. And across the board, the markets are struggling to get back into that previous volatility that we saw in that 15-minute candle. Okay, so S&P going down again, so you won't buy here. Forex gal, okay, wise words. Okay, some other things coming through in the squawk, guys. Let's listen to this. Okay, so I mean, again, that's just saying that there was nothing in this current FOMC minutes to say that we're going to do the bond back buying. There's nothing to say that in September and October that we won't readjust the bond back buying. So maybe that's that's the forward guidance. We're trying to read the lines between. Nothing's going to happen now. There's nothing to say that it won't happen in the September meeting. So maybe that will roll through to the futures and, again, send the market a little bit more into negative territory. So, again, like I said, guys, when you trade in the futures markets, they are the most volatile, but you have to understand how far these things are priced into the future. Okay, so, if the Fed is going to move, on the tapering, the bond back buying in September and October, that's fine, but it's still light years away in the markets, really, isn't it? Yeah, absolutely, Forrest Gall. I mean, the tapering is going to be gradual. They're not just going to come out and say it's going to start. So we've got Jackson's Hole as well tonight. We've got a lot of the Fed members speaking now. So the market's just taking a little bit of a bid now. It's looking to hit these lows, maybe. We're just testing the 38.2, so break through that. Then maybe 138.45, where the market will test. And below that, really, 1.633. Well, I mean, what's the best bet on London's reaction to FOMC? Well, and again, it seems to be taking it negatively, doesn't it? The market seems to be continuing this previously determined sell-off. If the market's taking it well, then everybody who's short-term or medium-term, bearish in the markets will be getting out, but they don't seem to be, do they? So I think everyone's taking this fairly negatively, or again, I guess, fairly kind of that the market is in some respects recovering. So quantitative easing and the bond back buying is certainly going to be addressed by the end of the year. I think that's what I'm getting out of these meetings, what these minutes, guys, that for sure by the end of the year we're going to see significant tapering and significant end to these bond buying backs. So that's what I'm reading through all these comments. So, as I said, the markets have still got a long way to drop. Don't be fooled into thinking just because we've had the worst 3 weeks in whenever. It's the worst 3 consecutive weeks. This market could drop, a good few 100 points over the next few weeks easily without batting an eyelid. Yeah, if there's all that dollar weakness is going to get bought back. We're still in a massive 10-year bull market in the dollars. So any, major short-term dips are going to get bought up. People like Japan, Norway, China buying back the dollar, won't you, when it's low down in huge quantities. So there'll be plenty of dip buying in the dollar. Don't worry about that. Yeah, absolutely. And then the euro for me is dead anyway. So I'd always buy the dollar against the euro. So the euro dollar is going to get smacked. As for the Aussie dollar, who really cares about Australia? Nobody. The only people that care about Australia are currency speculators. Nobody else in the world cares about Australia. That is for sure. I don't. Yeah, absolutely. I think I'm with Forex Gal. The market's going to drift. You can get sucked into selling in these candles here, and you're going to get drifted around. 50% you'd look to sell a short, and the market's already, 10 ticks higher. Nothing really, guys, that I could say with any confidence to tell you to take a direction on the market. All I would say is let the markets drift around and find some value. Okay, the Bollinger Bands have not really been affected too much. Okay, so go back to your hourly charts. Okay, we've just seen that quick spike down, but then the market's really come back. So we're trading inside that Bollinger Band. So the market, for me, is going to have to get back to the top end in the moving average before it then continues to go down. But if it does, it's got like 50 ticks or so easily to start retracing. Once it's been there once, it can go there again. Yeah, for absolute sure. So I'd look to be selling a lot higher than this before I started selling. That is for sure. But I wouldn't be buying into any of these indices right now because I can't see any significant bottom in any, to be honest. So yeah, I think the general consensus is sideways all the way around here. Like I said, guys, you have to be responsible when trading these things. Everybody in hindsight could have said, well, of course the Fed was going to say this, so I'd have just sold the S&P and got out at the bottom. But you can't do that. Okay, that isn't trading. That's just taking a punt. Obviously, you can read the order flow, you can trade, but for me, there was no real way of trading that on the short side, to be honest. So what I do now is I let the market fire back up, remake a decision. So I'd be looking to short the S&P or any of these other markets around the moving average. Certainly let the FTSE get back to 1399, Eurostoxx to 2785, DAX really doesn't matter, and maybe just let this whole candle retrace before I started selling back into this weakness. That's what I'd say. I certainly wouldn't start buying any bottoms unless you had some very strong opinions. Okay. Any other thoughts, guys? There's been nothing on the wires. We're 27 minutes after this data's been released. There's been nothing concrete saying one way or another, and that's why the markets are drifting. But they're certainly regaining these losses. So again, I might want to see a quick spike in these markets, go up, because there is nothing strong enough to take these markets bid. But if they do go up and overextend, I'll be selling into that strength for sure, because the overall trend right now is still down. Okay, so I'll be selling high. I would not be selling looking for these levels down here to break. Too dangerous. Okay. Okay, so nothing really else coming out of the markets, guys. A lot of conjecture now. And again, I'm going to turn the squawk off because you just get too caught up in what's happening. But the key market data has been put into the market right now. So anything that would be traded on in the short term has been absorbed. Okay, so the market was going to sell off. It had made a new low bound now. So whatever has been said, by the FOMC is not bearish enough to send this market down. That is for sure. So in the short term, it's going to retrace the initial move, as we're seeing now. But once it's done that, for me, I think it's going to continue going down. So I wouldn't start selling yet. I'd let the moving average be tested. I'd let a 15, 30-minute or hourly candle close below that and then maybe take a short position. Or my advice, to be honest, wait till tomorrow morning. Okay? Don't want to hold positions like this overnight. Too stressful. So I would let the markets bid back up and then sell down from the highs. Okay? Wait for tomorrow. Wait for tomorrow's open. Okay, that's all I can suggest, really. Otherwise, you're just going to get whipsawed in this noise. You're going to get short here, the market will come to here. You get short here, the market will go to here, and then it will come down. Okay? Okay, guys, well, the first time I've done this FOMC minutes, my advice is, it's late on in the day, it's 7:30, I would call it a day. I'd wait for the markets to open tomorrow. Don't leave yourself a difficult overnight position. because I wouldn't want to stay long or short. That's for sure. Plenty more coming from me on the FX Street site, so do look out for me, guys. Again, at Steve Ruffley, follow me on Twitter. And I'm not a difficult one to find. Any questions you wanna ask from me, guys, just please ask me. But as I said, pretty much whipsaw. Nothing's really happened. Market's gone down. So you could have sold into that or bought back low. Very, very dangerous trading. For now, let this 15-minute or this hourly candle close in the S&P and then take some direction. For me, let it go higher and sell. That's my advice. Okay, guys, absolute pleasure. Thanks a lot for having me. A good attendance today, and it's been great. I will see you all very soon. Cheers, guys. Take it easy.